Thanks, Asanka, and thank you to the previous panel for that really interesting discussion. So, like Asanka mentioned, they say money makes the world go round. But what about digital currencies in that case? So, this panel is here to kind of answer that question for us, the future of money and currency. Leading this conversation is Aruni Gunathilaka. Aruni is a financial expert with over 25 years of experience in regional financial markets. She is an expert in enterprise risk management, credit audit, and business origination, and has held leadership positions in local and international banks, such as Hatton National Bank, People's Bank, and Standard Chartered Bank in Singapore and Sri Lanka. Joining Aruni for this panel is Sandun Hapagoda, Kaushik Kadida, and Damit Palewata. Sandun Hapagoda joined MasterCard in 2017 to lead the company's digital and value-added services business in Sri Lanka and the Maldives. Since then, he has been instrumental in deepening the country's partnerships with the banking and non-banking financial institutions, FinTechs, and merchants by enhancing and streamlining their digital payment journeys. Kaushik Karidal is a seasoned financial service leader with over 25 years of global experience across banking, payments, and data strategy. He is currently the co-founder and CEO of SQFT Fund, a real estate investment firm. He has also led data and risk transformation for one of India's largest payment platforms, PayU, and held senior leadership roles at Capital One and Citi, driving large-scale financial innovation. Damit Pallewata is the Managing Director and Chief Executive Officer of Hatton National Bank, a leading financial institution in Sri Lanka. A veteran with over 28 years in the financial services industry, his career is distinguished by expertise in risk management, corporate banking, and digital transformation. So let's hear from our experts who are dismantling old financial systems and building bold new ones. Aruni, over to you.
Thank you. Good afternoon, everybody. It's good to see lots of young people here because I think if you ask them what is a bank, have you been to a bank? I don't think they've ever been to one. Like my daughters have never been to a bank. They're like, what are you talking about? I asked them, what is your bank branch in New York? And they said, I have no idea what you're talking about. I just have an app. I don't even have a card, right? So it's good to see all of you all. And unlike the previous panel who said the change is going to take a long time, structural change, I think in this world of finance, is changing every day as we speak. So it's changing exponentially, and it's impacting all of us on a day-to-day basis. So as the world transitions to a more digital economy overall, the future of money is rapidly evolving. New technologies and fintechs, cryptocurrencies, and digital payments are reshaping how people interact with money, conduct transactions, and manage finances. So the panel will explore the transformative impact of these technologies with a particular focus on use cases in South Asia, focusing on India, because we have an expert here from India. We are fortunate to have him here. And we will also discuss how customer behaviors are changing and how we have to understand customer needs about customer experience and how are we changing in terms of digital transformation. And I have to be a little ashamed because when I met Sandun a few weeks ago, I still think of MasterCard. Okay, he's the Asia head of MasterCard, and I thought MasterCard is still a card, sort of a credit card, right? And he said, no, it's nothing to do with that. We are doing various different technologies and payments and transformation in what we do in terms of technology. In doing payments and digital wallets and all that across the world. So there's a lot to learn. And let me start off with Sandun. Let me start off, Sandun, by asking you how do you see customer behaviors changing and how that has driven change, disruption, and transformation?
Thank you, Aruni. First of all, thank you, Howard, for having me here. I also feel very young when you said that your daughter has not been to a bank branch for a long time, because I have not been to a bank branch for about at least 10, 15 years, at least 15 years. I worked for 4 banks in Sri Lanka, but for at least last 15 years, I've not been to a bank branch to do my own banking things. I have gone there to fix computers and different other things at different roles. But coming back to your question in terms of how the consumer behavior changes on the payment infrastructure, I'll probably speak about how it is changing in APAC, Asia Pacific, and I'll let Kaushik to talk about India, and then I'll talk about what's happening in Sri Lanka as well, because I think it's very important. We have large audience from Sri Lanka also. If you look at the APAC context, we see a huge adoption, and Asia is actually by far leading on this huge adoption of mobile first strategy in terms of consumers for payments. Mobile first strategies where anything to do with banking services, they look for services through the mobile application as a consumer. So there is no push required anymore in most of the countries in Asia. And India is by far leading in terms of the number of statistics on the adoption, but the same with Southeast Asia as well. And in terms of the form factors, we see also a huge shift from typical card present transaction. We say card present when you go to a merchant and give your card and make a payment. Now, in-store payments are also changing from typical card present to card not present like transactions. When I say card not present like transactions, where you still go to an in-store, but you don't necessarily give your card and make a payment. Like if you travel to Singapore or any other country and go to a McDonald's, which is a luxury that we don't have anymore in Sri Lanka, what you do is you have self-ordering kiosk. You go there, order your burgers, pay there, and you just go to the counter just to collect the items. And this is an increasing trend that we see in many of the countries and now in India as well. When you go into a merchant store, including some of the dining places as well. So that's increasing quite well. And also we see a huge growth in terms of people adopting X-Space. When I say X-Space, that includes Google Pay, Apple Pay, Samsung Pay, or whatnot. And people adopting that, and they're attaching whatever the financial instrument to these third-party applications to make payments, because they give a better stickiness, they give a better user experience. So Damit will speak about how that behavior is changing. But what I'm saying is, irrespective of which bank you work with, people are adopting X-Space significantly. Now, coming to Sri Lanka, what we have seen during last 3 years at least is this significant shift from contact transactions to contactless transactions. In terms of the statistics, 3 years ago, the contact transactions, when I say contact transactions, that's, go to a store, give your card, make a payment, versus contactless is where you tap and make a payment. So that consumer behavior has changed a lot. 3 years ago, it used to be around 19% contribution to all the transactions, but today, we have about 60% of the transactions happening through contactless forms, which is fantastic, even without having Google Pay and Apple Pay in Sri Lanka. Imagine once we have the Google Pay and Apple Pay, this would really, really boost and support the economic growth. The last point, because of the interest of time, is the rapid growth of e-commerce in Sri Lanka. We see a significant growth of e-commerce in Sri Lanka today. If you look at the overall transactions, over 40% of the transactions are e-commerce, 44% of the transactions are e-commerce. And out of that portion, about 85% of the transactions are taking place through your debit card. So when I tell this to people, they usually don't believe, because typically when you talk about e-commerce transaction, at least in Sri Lanka, we relate a credit card to the transaction. But if you look at the number of transactions in Sri Lanka, the larger portion, at least about 85%, is contributed by debit card, which is a fantastic trend to have. So I'll probably stop there and maybe talk about underlying technologies in the second round.
Yeah, sure. Now that you just mentioned Apple Pay, lots of people are interested as to why we don't have it in Sri Lanka. What is sort of restricting us having apps like Apple Pay?
So this is a common question that's being asked in multiple forums. Why we don't have Apple Pay? Why don't we have Arita PayPal? And some of the conversations about Google Pay, etc. I think it's a business decision by these individual organizations. Actually, it's a very relevant question because for these international entities to come and bring a seamless experience to the country, it's very important that we kind of show them the economy of scale for them to actually have the business set up here in Sri Lanka. So at the moment, if you look at the numbers, Sri Lanka digital payment is about 6% of the personal consumption expenditure. So today we don't have that critical mass for a large international entity to come and invest in Sri Lanka and set up a shop here because their running cost may not support the economies of scale at the moment. So it's a business decision than anything else. It's not that technology doesn't support it. We don't have technology. Technology is pretty much available in Sri Lanka. So this PayPal, Apple, and all these entities has to take a business call to come and establish in Sri Lanka.
So it's more about the business side. The scale is not about any sort of country risk or anything like that?
No, nothing like that. I mean,
Okay.
It's a size of the economy. Like average debit card today does only 6 transactions. Average POS machine does about 6 transactions a day today. So for you to come and set shop here, that scale is not sufficient.
Okay, thank you. Yeah, so Kaushik, I think India, what has happened in India is a fantastic example of creating where there has been an impact on economic equality or addressing economic inequality and democratizing sort of access to finance. India has been a fantastic example. Also, a fantastic example for doing away with cash. Sri Lanka, we are still using cash transactions, and sometimes people insist on cash, obviously. So we're hoping that Hans Vijay Surya, doctor who spoke yesterday, hopefully he'll digitize all the payments so that people don't keep asking for cash. So we would like to hear, especially on the successful program, the UPI, and how that was done in India, and the entire sort of transactional and digital financial ecosystem in India. If you can just share with us your thoughts and what has happened in the past few years and how that was achieved and the challenges maybe that were faced in doing that.
Yeah, sure. Thank you, Ernie. So I know you started off with saying innovation, disruption, and transformation and stuff, right? These are, I think, some of the most abused terms in general, right? You often hear about these words being thrown out for small things that may not be so impactful. But when it comes to what India has seen over the last decade, in terms of digital payments, I think every single one of these is sort of an understatement, right? Disruptive is an understatement. Transformative is an understatement. Innovation, understatement. What India has experienced in the last decade is just, something sort of, out of the world. And I'll take a couple of minutes to just walk you through why I'm saying that. Right? So let's go back a decade, like 2015. India was mostly an unbanked country. Most people in the country did not have a bank account. Everybody transacted with cash. And nobody really believed in any form of digital credit card penetration amongst the lowest in terms of per capita and so on, right? In 2016, India released the UPI interface, right? Unified payment interface. So like let's 9 years and change, right? So in that period of time, India has moved from, like I said, mostly unbanked to today, pretty much every single Indian has a bank account. And in terms of payments, 85% of all transactions happen cashless today in India. And just last month in October, for the first time in India, we had 20 billion, with a B, 20 billion transactions on UPI. That is 50% of the global real-time payments, digital payments that happened via the UPI rates, right? So getting from there to here in 10 years is why I say, it is, it's not disruptive, it is not transformative, it's not innovative, it's something just way beyond that, right? But to make make that kind of a progress in 10 years is, quite a feat. And it is not any one particular thing that contributed to it, right? It's an ecosystem play that has to sort of feed on every step of the ecosystem to get to this scale, right? Like I said, the first thing is the Indian government allowed for zero balance account creation. They promoted it quite aggressively. In fact, they had volunteers and government officials go door to door encouraging people to open a bank account. So that gave the basic platform for people to actually get into the digital payment ecosystem. And then the government under NPCI created the UPI interface, which was a platform play, and it was opened up. It's an open platform that every bank could plug into, and they allowed innovation on top of the UPI rails. It's not like you just create the UPI and then it'll just take off, right? So they allowed the Paytms of the world, they allowed other digital payment fintechs to be able to plug into that platform. So that's the platform thing. And in terms of like the merchants, at the point of taking the payment as well, many of the merchants are like, it could be a vegetable vendor, it could be somebody as impoverished as that, right? It was as simple as having a QR code. All you needed was like a 1 rupee printout that was stuck up near your thing, and anybody could make a payment, right? So it's this sort of the ecosystem that created the network effect to take us, so far to today where we are, right? The economic and social impact of what we have achieved is just tremendous. Talking about the economy, I told you that we hit 20 billion last month, and that is at a 30% growth rate, right? You can only, the rocket ship is just still taking off in some sense in terms of digital payments in India, and it facilitated a lot of companies to come into bearing. The transaction costs came down to near zero, and the time for transaction came down. The trust in the economy improved. Corruption became much harder because everything was digital and traceable. Fraud in the stores, for example, like if you have an ice cream store and you put somebody there to sell ice creams, they could give a few scoops to people and take cash and pocket the cash. But now with so much penetration of UPI, small things like that is harder. So at a social level, I think the trust in the country as far as payments is concerned has gone up, right? Like I can tell you, like, let me close by saying, like I lived in the US for many years, and then I came back to India 2015, right? Just sort of when this thing was unfolding. And oftentimes when we talk about big things happening in India, it's like an aping of the West, right? It could be Flipkart aping the Amazons, it could be somebody else aping something that's happened in the West. But as far as payments is concerned, India is the global leader. Even to this day, the kind of penetration India has, no country, including like the US, Zelle and stuff, is just like nothing. They're just trying to figure their game out, whereas India is now the global leader in payments. And as an Indian, I'm really proud to be able to talk about this topic where we have the supremacy and we have really achieved something that nobody else in the world has achieved.
So you said, yeah, how did you create the trust? I'm interested to learn, because people are very suspicious of going digital because of, there are risks, cyber risks, etc., and you don't even understand, you don't know where your money goes. So especially if you're not that literate or coming from poorer parts of society who may not that be financially literate. I'm wondering how you created that trust, because you can't also force people, but I think there was some element of force overnight. I think it sort of non-cash transactions were taken away overnight. So is that the best way to do it? I'm wondering, or is it a more consensual way to do it?
Yeah, I think that's a great question. Yes, India did have demonetization, which really accelerated this from an adoption standpoint, because people practically had no other way to transact for a period of time without this. But notwithstanding the fact that it was sort of imposed on people, the real game changer was not only demonetization. Demonetization definitely was an accelerator, but the launch of Geo network in India was another big thing, right? It was in the private sector. Reliance launched Jio, and they slashed the cost of using smartphones to such a low cost that everybody could afford a smartphone, right? Uh, which is, in my opinion, the biggest thing that accelerated because, and now, regardless of your socioeconomic standing, you could afford not just a handset, but also the monthly connection. So that helped a lot. And I think the lesson from this is not like demonetization happened, but it helped accelerate. But the real lesson is the consumer, end of the day, wants believable, frictionless experience at a low cost. And that's what this was all about. It's believable because it's all 100% traceable. It's frictionless. Like anybody that has used UPI will tell you that it's as frictionless as possible, right? And low cost, it's zero cost. And we can talk about that, how zero cost is achieved and stuff. But when you put these three things together, behavior change will happen. And that's what we're seeing.
Okay. So that's a good comment to go on to Damit, because Damit is looking a little nervous when you say zero cost. He's he's the CEO of one of the largest banks in Sri Lanka. And if you look at normally their income statements, they are always focusing on fee income, which is transactional cost basically, right? I think there is significant disruption, and we have all been talking over the past weeks about foreign banks exiting Sri Lanka. That's a regional and global play. It's nothing to do with Sri Lanka, because most of about 30, I think, international banks have gone out of retail banking because it's where you don't need bricks and mortar. Digital banks and fintechs are disrupting banks entirely, and you don't need bank branches or all those high costs. You don't need so much of cost. There are capital costs, there are real estate costs. So you have the fintechs have got rid of all those costs, and you can just do a transaction at no cost in a few seconds. So Damit, coming to that, how do you sort of this can be opportunity for you, or it can be a complete disruptor and an existential threat to banks. So we would like to hear from you how you are planning to tackle it and how you have been tackling it.
First of all, thank you, Howard, for having me. It's a pleasure to be here. Very interesting topic to talk about. First, so unbelievable story from India, actually, our closest neighbor. But before getting into the problem, I think context is very important. So when India aggressively moved into this, I think Kaushik has very correctly said the banking penetration of India was very low. So therefore, there is impetus. So you can push the digital agenda. But in the Sri Lankan context, 85% or somewhere around Sri Lankans have a bank account. So the same strategy might not work here. So at the same time, if you look at, for example, my bank, we have 256 branches island-wide and 900,000 ATMs or CDM machines. So you have access to cash. So the concept of driving the concept of cashless is tough because we have access to cash. There is no problem of access to cash. So therefore, there is no problem to resolve in getting access to the cash. So our strategy was different in getting the digital agenda adopted. On top of that, we have a challenge. We did not have DPIs, which we call digital public infrastructure. I'm sure Dr. Hans would have spoken about it. So therefore, creating an ecosystem of digital payments were challenging. For example, if I have my app and the digital money digitally in my app, I should have an opportunity or a place to go and use it digitally. You can see it around urban areas quite a lot, but if you move away from urban areas in Sri Lanka, so that opportunity is less. So there is enough space for banks to go and create that ecosystem outside urban areas. So that is what exactly a lot of banks have done. So we have created that digital access, plus we have created ecosystems where people go and do transactions digitally if they have digital access to their bank account. So that has worked significantly in favor of banks. And also a trend that we have seen, now in Sri Lanka we have 30 banks, even though the country is small. So we have 12 local banks and maybe 7, 8 state banks and maybe another 7, 8 foreign banks. So those banks have, a lot of banks have payment and banking apps. There are about maybe 8 to 10 very prominent apps. So they allow their customers to transact. So we started seeing it differently. We thought if we can come up with something which is not relevant to or applicable to a particular bank app, which is bank agnostic, a payment app. So we have seen an opportunity for any customer of any bank to transact to that app, which we have created. We have a payment app called Solo. Of that app, as we thought, 55% of the customers who do the transaction through app are not our own bank customers. So there is a tendency for people, even if you have a bank account, do transaction where the convenience and the cost efficiencies, as you rightly said. So whilst having these trends, as a bank, I think the question that Aruni asked is very pertinent in terms of where we get the fee income, how do we get challenged? So we have seen a lot of fintechs are doing some parts of banking transactions. So they are doing it extremely efficiently and cost effectively, because banks still in Sri Lankan context are heavy, and it carries a lot of systems and processes and legacies. So the per transaction cost may be little expensive than a lightweight agile fintech doing a specialized piece of that transaction, giving customer the convenience. So the strategy that we have adapted was, rather than competing, you go and complement. You get them to work with you. You make them the last mile of your delivery through the fintech. So that has proven very effective to banks. So banks have collaborated and get them to deliver their last mile through the fintech. So likewise, we got our service delivery, keeping cost effective and also efficient.
Okay. So I think we have to sort of expedite what your session. Now, Sandun, you told us about the change in behaviors, etc., and what customer expectations are, which are also changing daily, that could be changing to different things from today to tomorrow. So what are the type of technologies you think that would develop in the next few years?
I think in terms of technology, I'll probably stick to 2 or 3. The biggest one we see is this whole trend towards tokenization. We've moved towards tokenization of payments. We move towards tokenization of real world assets, and tokenization is going to play a big role in terms of way we make payments and how we even live our lives in future. And to link to tokenization, we have a significant growth of IoTs coming up, Internet of Things.
Can you just explain what is tokenization?
So tokenization is basically without exposing your own credentials or card account or bank account, you will put that in a specific cryptogram or a specific encryption methodology and use a reference instead of the actual payment instrument to make payments. So as an example, if you have a payment card, I'm just oversimplifying it. If you have a payment card, you can give the payment card to the payment network and receive a cryptogram, which is nothing but a 16-digit number, which is a reference to that particular payment instrument. So even if your token is exposed, it's easy for you to cancel that token and obtain a different token to make payments. And the beauty with tokens is it can give you different tokens based on your instrument, based on different merchants. Same payment instrument can have different tokens. So that will bring more security, but also more than the security, it actually brings a lot of convenience to the consumers. And we are moving into an era where people are even forgetting how they are making the payments. As an example, if you today book a rideshare application or things like Uber Eats or Pick Me Food, your focus would be ordering the best food that you want to get, and you sometimes you don't even care how you make the payment, right? So that trend is taking up quite fast. We also see a significant growth in terms of people adopting. As I said earlier, the e-commerce growth is significant, and with that, people are trying to again card on file transactions. When I say card on file, like Netflix, you register the card with them and they keep on debiting your instrument. Even if you replace the card, your bank will update the Netflix, and you don't have to manually go and update your payment instrument. So this will take up pretty fast in the coming days. So we see that affecting things that we do on everyday basis. Yeah.
Okay. Wow, fantastic. It's going to make our lives so much easier. And we're going to spend much more money, I think. Okay, Kaushik, so you spoke about the transformation that's happened in India and what has changed rapidly. So what do you think, how do we sustain this and how do we continuously sort of adapt to change and continue this whole, the progress that you have made in the next, say, 10 years?
Yeah, I think with this phenomenal success that India has had, there are a few things required for us to sort of complete this story, right? The first is financial literacy. So basically, in the past, what would happen is people would pickpocket you and steal the money in cash in your wallet. But now there's no cash in the wallet. So all of these people have moved into digital frauds. So it's very common for an unsuspecting customer to get a call and saying, "I'm calling from Flipkart. Okay, I want your OTP," or something like that. And then you give the OTP, and next thing you know, they've taken out 10,000, 15,000 from your bank account. So just financial literacy in ensuring that the customers know what to do and what not to do is going to be important. Again, this is the downside of frictionless, right? When you make it so frictionless, it's also easy to sort of slip and lose money. So fraud rates have increased quite a bit. And between the government and the other players like the banks and the FinTechs, we are trying to use both analytics and financial literacy to bring down those fraud rates. Because that's going to sort of be the underpinning for us to make sure that this is sustained. And the second one is cross-border. Much of what I talked about is domestic transactions within India. And as we globalize and as India has global aspirations, being able to use your UPI outside of the country becomes important. I know there are conversations with UAE, there's conversation with Sri Lanka as well, to make it possible for people to use UPI here, right? So that's the cross-border element that I think will take us to the next level. Sorry, MasterCard. Because right now credit, yeah. And then the third thing is value-added services, right? UPI currently is just, payment of sending what you have in a bank account to another person's bank account. But credit on UPI is something that is happening via RuPay. So there's got to be this is where I think it gets a little tricky as far as RBI is concerned, because they don't want to introduce systemic risk by allowing a lot of lending via UPI and so on. But without going there, the value-added options like buy now, pay later and stuff become difficult. So the regulators have been sort of 2 steps forward, 1 step backward on this. So as sort of industry people, we're waiting for clarity on that. And I think that's going to happen over the next few years. And finally, it's the data. When you make digital payment, you have a trail. The trail is great from monitoring and analytics and improving your business and all of that standpoint. But the data is also something that could be misused and abused. The country has been focusing on that. In fact, just today morning, India's equivalent of GDPR, which is DPDP, Digital Personal Data Protection, rules came out today. So if you're an Indian, start expecting to be bombarded with consent. Every time you log in, people or the merchants will ask you for explicit consent to be able to use your data. So these are the things that have to sort of be built as strengthening the foundation to be able to continue this growth.
Okay, great. Damit, just very quickly, I think we have only 1 or 2 minutes more. I think you mentioned that banks are partnering with fintechs and using technology. So when we talk about any form, whether it's international trade, corporate transactions, it's increasingly, there's so much of e-commerce and global transactions. How can existing financial institutions adapt to incorporate emerging technologies such as blockchain or AI, especially AI, in your operations? It's a big topic, but you have to
It's a
just
big
answer very
topic
quickly.
actually. Yeah. So if you look at the existing systems of banks, so those are very legacy systems, and these are being converted to more agile, more API-driven systems. So the first thing is you need to be the banks run on core banking systems. Those are transaction banking systems, not really having a front layer or mid layer to get connected with APIs. So we need to be able to make our systems talk to whatever the fintech's new platforms to exchange that piece of information that is required to process the transactions. So that change, a lot of banks have undergone at the moment. So a lot of banks have exposed their APIs to fintechs because they're extremely efficient in delivering that part of the transactions. So the challenge that the banks had to undergo that change, that took a fair bit of time in Sri Lankan context to adopt that. But I believe in terms of industry, we have gone distant. Now a lot of banks have the capability to connect with those fintechs and change their systems to expose their APIs.
Yeah, I think the legacy banking systems have become a real liability, including not only the systems, the real estate assets, everything which were assets before have now become liabilities.
Absolutely.
So it's a real game changer. So I think that brings us, our time is up on the screen. We didn't have time to speak about, there are very relevant topics like frameworks and regulation, etc. We have time for questions, okay. So we didn't have time to speak about the regulatory frameworks, the risks in all this, and as I said, the customer trust, customer protection. We couldn't speak about that, and we couldn't also, unfortunately, talk about how you can trade in cryptocurrencies and how you can make money. So, but if you do have any questions, please do ask.
There were 4 questions.
There are lots of questions. Great.
Yeah, thank you very much. This is, for me, quite an interesting session because I would be what my bank manager would say, I'm a dinosaur. But then I do think that there are different areas and different programs, different people within this country which has different aspirations and access to the kind of information that you're talking about. As I am also a HNB customer, perhaps Mr. Pallevatta could answer this. is there a big difference, the way, the behavior, the aspirations, and the challenges faced by rural and urban customers? I'm also a researcher and I've been following with a lot of interest Gami Pubudo for almost 20 years. So, and the other is that, what is the, is there any way that women who are in entrepreneurship in agriculture, do you have any kind of outreach that programs which could help them? Again, because I have been working with your bank on CSR projects for quite some time. But I'm quite interested to know if you have women who are, women-centric programs.
Thank you so much for that question. I think it's a very pertinent and a timely question. So if the first question, whether the aspirations of urban Sri Lankans and rural Sri Lankans are different, yes, we see that because we have a lot of reach outside Colombo. Maybe 60% of our advancers book comes from outside Western Province, which is, more beyond rural, urban areas. So their aspirations, centered around 3-4 things. So they are running maybe small to medium businesses. Most of them are entrepreneurs. So they have challenges in access to finance. They have challenges in financial literacy. In Colombo, we launch multiple products. It doesn't reach the village because even though they have access, they have understanding of the product, they don't have an ecosystem to go and expose that product to. So that's what I said at the beginning. Even somebody has a digital device or in the device an app to use digital means, but he doesn't have a place to go and use that. So our challenge has been always, how do we create that ecosystem? Everywhere when we go and deal rurally, the challenge that we have seen is Sri Lanka has a cash economy very strong. So there are so much of access to cash and they are dependent so much on the cash economy. So we need to give a good reason for them to break away from cash economy. So convenience itself doesn't help rural communities to get to digital platforms. We need to show them much beyond that. So that's what the key difference in aspirations that we see. The urban is more driven by the convenience, and maybe there are multiple options to shop around. But rurally, it's a difference. So their aspirations are different. Then if we come to women entrepreneurship, so yes, we have a very specific program towards agriculture. We call it HNB Prosperity. It's a driven program for agriculture to modernize and convert farmers to agripreneurs. So it's not just giving financial assistance, it's driving technology, it's driving innovation, giving the concept of productivity a meaning among the farmers. How do they use financials effectively? How do they adopt technology like the greenhouses, drip irrigation, drone, IoT, whatever it is, and we provide access to that. And most of those projects actually women driven. So we have exclusive women banking proposition. We have exclusive agri-related proposition. So then combination of those, I believe, support the rural or for that matter, even urban women entrepreneurs. But apart from both these things, I would like to give you some statistics which justify why these aspirations are different. Sri Lanka as a country has 1.4 trillion currency in circulation. So that's why its cash economy is so huge. So we can't convert immediately cash economy to digital without having economic implications, which we don't want to have at the moment at a country level. So maintaining such a cash in circulation is a mammoth task. If I just draw a parallel to how costly it is to maintain that cash in circulation, which derives out of even though whatever the digital drive we have. So that's why these aspirations come on the cash economy. We have maybe around 1.5% of GDP spent on maintaining this cash. So those had to be printed, circulated, put into ATMs and all that. If you make a comparison, as a country, we spend on education little over 2% of GDP. Can you imagine the cost of carrying the cash? So, as banks, so we have, I think, a bigger aspiration or more than a duty to make sure that we shift people to digital, because that money that we spend can be put into good use. So therefore, the matching that rural and urban aspirations to move into digital, even though there are differences, I think banks play a very big role in that aspect. I hope I answered your question.
One question for me actually is connected with NFC related payments, which we discussed before on Apple Pay and Google Pay. Now, the challenge we face in Sri Lanka, working with Sri Lankan merchants, still there are card payments they accept, but they charge 3% on top of that. Either we have to go to nearest ATM and withdraw in cash, or we have to absorb the cost, which is significant portion. But in Apple Pay or Google Pay, probably the per transaction amount would be very less. If I'm correct, for Apple Pay would be 0.15%. So is there any challenges for us to move into Apple Pay in terms of technology point of view? Because according to my understanding, the tokenized system, what we have in local banks, purely dedicated to 16-digit card systems. But in NFC related payments, it's purely device specific, like a DPN account number. Can we transform our available technological system to DPN to accommodate NFC payment systems?
I think that's for Sandhu.
I'll take it. So basically, if you talk about the economics typically concerning around the MDR, which is the merchant discount rate, and there are few merchants in Sri Lanka. I'm being very specific. Few merchants in Sri Lanka, those who pass the MDR try to pass the MDR to the merchant. So networks don't allow that as a rule. And central bank has been recently very vocal about that. You can't pass that to the consumer. And government has officially announced that they are bringing in certain rules, which is going to make it as a law in Sri Lanka that you can't pass the merchant discount rate to the consumer. Do we need a merchant discount? Of course, we need a merchant discount because somebody has to compensate the whole ecosystem, and typically it's the merchant. Because of the convenience, there are so much of consumers coming to that particular merchants to buy stuff. Like as an example, let's say we have large supermarket chain in Sri Lanka. Today, they announce they don't accept cards anymore. Of course, all the customers will go to other supermarket, right? So there's a huge convenient factor also come into play. But having said that, it doesn't differ from different form factor. Like as an example, whether it's Apple Pay, Samsung Pay, or whether you just tap a typical card, your MDR would be the same. The cost that merchant pays to the bank. In terms of the readiness, today in Sri Lanka, 99% of POS machines accept contactless. And all those POS machines, if you have Apple Pay, you can go and make a payment, including whatever the POS machine that you see in this hotel. Also, just to add to your point, we also have to be very careful in terms of adapting some of the technologies as well. Like as an example, I'm not a huge believer in low economics in Sri Lanka because low economics might not work, and I'll come to that. We spoke about India, and if you try to copy paste whatever happens in India, may not be the ideal way, because as a country, Sri Lanka has to figure out what is relevant to us because of the size of the economy. He spoke about 5 billion transactions that happens through UPI. In Sri Lanka, we have Lanka QR, which was implemented in 2017. Today, we have 450,000 Lanka QR codes in the country. And we have reduced the MDR to 50 basis points. And with that, today, 450,000 QR codes, there's only 250,000 transactions a quarter. So it's not only the MDR, but also the consumer behavior has to be supported. So we have to, on the other hand, the contactless transactions have grown from 19% to 60%. So as a country, we have to figure out what's relevant for us and what can we build ourselves and what we should partner with international entities, depending on the size of the economy and what we can do and what we cannot do. So it's very important that we have to select that. Yeah.
Can I give you an example on that actually? Now, in April this year, we have made the transactions done through Lanka QR less than 10,000, zero MDR. But we haven't seen uplift for, since now we are going about 6 months, it's a very marginal uplift that we are seeing. So we don't believe, therefore, it is MDR that drives the business away. Because making even zero, it doesn't drive. So there has to be a different reason why customers are attracted to this digital ecosystem.
Okay, I think I'm sorry, this is a very interesting topic, but we don't have any more time. So we'll have to close it there. Thank you very much to my wonderful panelists.
Thank you.
Thank you.
Thank you.